Stephen's getting over it as well. He's starting in China today, a big deal involving Uber.
The ride-sharing company is said to be merging its Chinese business with the biggest player in the market there, Didi Chuxing. According to reports, the new combined company is valued at $35 billion. The deal comes after China officially legalised ride-sharing services last week by issuing nationwide guidelines for the industry. Uber and Didi had until recently been fierce rivals in China. Now, in a blog post seen by Bloomberg, Uber boss Travis Kalanick says the deal was the only way for the two companies to actually be profitable in the country. Uber China investors will get a 20% stake in Didi when the deal is completed.
Now, we're going to be watching the European banks very closely when the markets open this morning. That's because the results of stress tests were released on Friday, Steve.
The tests are designed to assess how a bank would perform if it was faced with an economic shock. The worst performer of the 51 banks surveyed was Italy's Monte dei Paschi di Siena, which had already been warned by the European Central Bank to deal with its level of bad debts. Now, just hours before those test results were revealed, the bank's board announced a plan to raise €5 billion in capital and reduce its bad loans by $10 billion.
Not the only bank that was given a poor result in these tests, though, was it?
These tests don't have a pass or fail, but Ireland's AIB didn't fare well either. It saw a fall of almost 9 percentage points in its core capital ratio. That's the indication of the bank's holding of safe assets. Now, that review could make it more difficult for the Irish government to reprivatise the lender, which was nationalised at the height of the country's banking crisis. Another largely state-owned bank, Royal Bank of Scotland in the UK, also saw a significant drop in reserves if it was hit with that economic downturn.
Should we have a look at the markets then?
Mixed picture in trading in Asia today. We had some optimism from investors after those disappointing growth figures out of the United States on Friday. They're hoping that'll delay any more interest rate increases, which markets do like. Chinese markets digesting an official survey of the manufacturing sector, which showed a contraction in July. The private survey from Caixin, though, providing a slightly more optimistic picture for China's manufacturers. Shanghai still down, as you can see there, over 1%. Some more of the day's business headlines for you next. Economists say the American economy is likely to suffer from uncertainty created by November's presidential election. A survey conducted by the Financial Times found a majority of those asked expected the contest between Donald Trump and Hillary Clinton to hurt investment. Businesses are likely to delay spending decisions until they know how things like regulation and tax might change under a new president. The chairman of the advertising agency SAATCHI and SAATCHI has been put on leave over comments that he made about a gender bias in the industry. Kevin Roberts told Business Insider that he didn't think a lack of women in leadership roles was a problem in advertising. The company's parent group, Publicis, says Mr. Roberts was asked to take a leave of absence while the board considers his comments. And France is to introduce pay-as-you-earn taxation for the first time in 2018. Currently, all French taxpayers must fill out a tax return and are billed for what they owe a year in arrears. France and Switzerland are the only two European countries which don't currently deduct tax at source.
Now, in the US, there's been something of an explosion in the number of so-called craft beers.
Production from small breweries in the United States rose by 8% in the first half of this year. That's after double-digit growth for 8 years in the industry. The number of breweries in the United States is now at a record high of over 4,500. The boom has also had positive consequences for other sectors linked to beer, as Julia Seeger now explains.
It's the fruit of a booming industry. Hop is the key ingredient in beer. And as the number of craft breweries in the U.S. has doubled in the last decade to more than 4,000 across the nation, farmers are also rushing to increase their acreage to meet the growing demand. So much so that the U.S. is now the top hop producer, ousting Germany from the top spot since 1967. But farming isn't the only industry to benefit from the craft beer boom. Tap handles have also become a big business.
Years ago, when you'd go into a bar, you'd maybe see 3 or 4 tap handles offering beer. Now when you go into a bar, there's quite a variety and certainly far more than 3 or 4 tap handles, even in the smaller bars.
In this bar in Milwaukee, there are more than 60 beers on tap. Beer fans say a fun handle could even swing their choice at the bar.
When you're at the bar, you know, looking around and you see a crazy one, sometimes you just gotta go for it.
Popularity in craft beer continues to grow. Figures show consumers are willing to spend more money on fuller flavored beers that command higher price points. There are essentially two fronts to the battle. Beer giants like Miller Coors try to win on volume, while craft brewers score bigger on price.
Julia Seeger there. Now, finally, a major accounting firm is changing the way it actually interviews graduates. This is because they are too impatient.
Apparently, yes.
Get on with
KPMG
it,
is
will you?
speeding up the way that it recruits staff. It changed its direction to the so-called millennial generation. That's those born between 1980 and 2000. Now, previously, the firm had conducted 3 assessments for new hires over several weeks, but that's going to be condensed into a single day, with applicants getting an answer within 2 working days. Now, KPMG made these changes after conducting a survey that found that more than 1/3 of its graduate recruits were annoyed by how long the process took. But traditional graduate employers are also having to shake up their processes because they're trying to compete with startups and technology firms. Millennials get a very bad rap. As a millennial, I feel kind of we need to justify ourselves. But it's because apparently people now, when you're looking for a job after wherever you finish education, want something more than just a job for life. They want, something interesting, something they feel is worthwhile, which is why these companies are having to change the way that they would have recruited staff.
And why it's taking so long. I want you to do that story in an hour's time, in 10 seconds, just to speed up the process, OK, Stephen? Stephen Carroll with Business on France 24.